Good morning, everyone. This is the 28th of May, last weekend of the month. Sell in May and go away, that didn't happen. We did have drama, but that didn't happen as a bad month. We're looking at a daily chart for the S&P. So before I get started, thanks for being here live. I appreciate you being here so early. And if you're watching at home, we will break up this video into two pieces, about 54 each piece. So tickers, and they'll be alphabetical, so you can scroll down the list and fast forward as much as you want. For first, let's look at the overall up market. I will have a separate video for this Monday night, because tomorrow the market in the US is closed. The world still trades, so tonight the futures should open and you can get an idea if we pop or drop. I haven't followed with the rhetoric over the political aspect of debt ceiling or whatever. Tomorrow morning, also, the market should open pre-open, but not a session. Like, we couldn't trade options tomorrow during the day. So I will do the video tomorrow night to prep us for the week. It will be a short week. All right, so what happened last week? You're looking at the S&P daily chart. So this is the straightforward picture. And we are trying to break out from prior failures. So February is the prior failure, and it looks like we're making a move on it. Now put that in contrast with what I've been saying, that the QQQ has already broken out. But first, let me change to a weekly candle to simplify things. So like last week, we had a dip and a rally. The dip looked serious and it looked drastic, and it hurt people who were just long calls for the week. And then this is what it looks like on a weekly basis. They are breaking out. They did break out from a closing basis. So these are weekly candles, in case you don't know what that means. The February highs, the close were here at 412. We have closed above it, closed below it, and then now we've closed twice above it. To me, that's a breakout. And I'll show you how it develops. The QQQ did that a while back, and look at what they ended up. That's that February, that is that February point in time. They closed above it here, but they never went back down below it, but they have broken out. So the Qs, look at it, they're gone, right? Thanks to NVIDIA. The SPY is almost gone. So technically, this should be the target, with a lot of resistance around this area from August. And that's what we're fighting. February levels to put them behind us once and for all, and then to tackle the August ones. The Qs have done that. And then we have the turd that is called the small caps. And that's what they're doing. They can't hold the floor. They're stuck under 180. Now it's 180 and a half. That candle here is called a doji. That's a whole week. It's an indecisive candle. Look at it right here. Almost exactly the same candle right there. They open, they spend the whole week fighting over upside and downside, and they close exactly where they opened. Here they did that, and then they collapsed later. So maybe we will do the opposite here. They'll have a deal of sorts. Brad. Hi, Vilma. Hey, Lou. That's right. It is Memorial Day in the US. So this is the big picture. So let's delve into the individual stocks that we have for today. We'll start with the king of stocks. So Apple, this is definitely not an obvious entry for Apple, because it's going into prior times when it was disastrous. That alone is not a reason to short, but it is a reason to think twice before allocating a full position, a starting position. Let's say I'm not long Apple, I decide to go all in here. I'm potentially opening myself up to problems. So what do? I buy dips. Into what? My dip is right here. Nick, you're going to miss out on a bunch. Yes, but I already did. So I'm not going to be an idiot twice by jumping in too late. So that is the logic as to how I can stop myself from going in. This candle is it's a big fail, and it matches up with these. Now, the beauty about having this hardcore of a fail, once you take it out, it becomes a big catalyst. Like, for example, this was a big fail because of that and that. And then once they took it out, this is a classic ABC-ish type of a move. They run, they consolidate, they break out from the consolidation, they run exactly as much as the first leg. So they will do it on a bigger scale. So Apple could end up over 200 if and only if the markets don't fall from the debt ceiling, whatever. If I'm only afraid about the politicians. They can really mess up this country or the world, actually. Now, a dip is good because if it happens, when it happens, they will find footing, come back and take this area out. And once they do, then they will go on to a rally that goes above 200. It's almost a guarantee, but they need to break it out. ABBV is exact opposite. So if somebody's going long ABBV here, they're doing the right thing, because I'm not sure if they're going to make money, but they're not making an easy mistake. It is falling into support. So with ABBV, I wonder if I had lines on Apple. No, I don't. Nothing that easy. Okay, so it's falling into one support zone and a backup support zone, and then a backup support zone. I'm not a fan of the whole sector, but it's definitely tradable on the long side into support. So if somebody sells puts or put spreads, I get it. If somebody's buying calls, you're guessing that this is a bottom. So you're buying a call because it's falling into support. So the way I would do it is I would buy a call and would say, I'm only going to lose this much and not more, and then I'll get out and try again lower. That's how I would deal with IFV. Let me see if I have more information. Oh, look at that. I do have bearish lines on it. So it is tracing to be exactly like my lines had said. Once they lost the support, they're bleeding lower. They do have support below. So if I'm long, it's probably too late to get out, but I should set a limit. Airbnb, I believe I shared along. It has fallen into support, but it's not a bullet. What's also happening is they're selling rallies. So I expect sellers into 109 or 110 if they go there. So the better thing to do is to have a credit put spread rather than having calls. Okay, thanks. So that's the deal with Airbnb. The business is okay. The world might end if we do default on our debt. I'm not joking about that. I mean, a lot of serious things will happen because it's never happened before. And if the experts don't, if an expert tells you they know otherwise, they're full of it. Don't ever listen to that person. Adobe gave us a scare, but geez Louise. So went long on a dip. I can't even remember where it was. Where the heck was it? Wow, what the heck happened? So because I'll tell you why. Is it going into earnings? Why do I'm all confused. I know I shared a trade that went under fire. I did a credit put spread on some dip in Adobe, maybe this one, into support, and it came under fire the next day. Yes, dip and then another dip, and then it bled lower, and then this. I haven't looked at it. I still have my position. I haven't looked at it. Clearly, they broke out from prior resistance, probably on the back of NVIDIA and AI. Oh, I remember. Okay. So they announced they're going to bring AI tools to help you edit stuff. Got it. Now I remember that. Something with PDFs too. So that is definitely an easier, like I would be able to use Adobe if I'm not an Adobe expert. That is the impression I got. So, okay, you can't short this bad boy. Yeah. It's not open. They can look into it. Okay, good. All right. So the Adobe played out. If somebody wants to chase it, the stock just rallied a bunch. I don't like to chase. 25% in a matter of a week, basically. And it blew past this. It shouldn't have. It's blowing past this. It shouldn't have. If it does blow past this, it's going to 550. So, and it shouldn't, but it could. So be careful. Buying dips would make more sense. Into what? Into anything below 375. I know it's a mile lower, but this one moves fast in both directions. AFRM, let's go closer. It looks like they're buying dips now. So it did spike. We did trade it well. A lot of people were long it into or traded it over the earnings in the group, and they made a lot of money into it. So this is not an obvious entry point, but long term the business is fine. My only concern is that Amazon might be in the business now. So as far as trading is concerned, 15.5 versus 13. 15.5 versus 13. This is the earnings reaction candle. Keep that in mind. And as far as I wanted to build another box for the current price action, so I would put it around here. This is range. That's the current range. So ping pong inside of that. If they take out the upper end of that, they'll go to 17.5. Otherwise, they'll dip back into the middle of this and it'll be a buying opportunity. That's why I have my alerts. I'm not long anymore, but I could be on dips. This guy is vulnerable to drift lower into 192, 188. It's vulnerable. I think that there's a chance they start selling rallies a little bit. Okay, I don't know the company, so you might want to educate yourself on the fundamentals and the future of it, and also look out for earnings. I'm not sure where. If it comes back into this big support zone, it's definitely an opportunity. So anything below 192 is interesting from a trading perspective. AMD. Okay, so here's my orange line. Are we there yet? Almost. So you know me, I don't like to go long stocks that hit my targets. It's just too late. And it's running on the back of NVIDIA. Now, technically, it has a lot more to go. It can hit 148. If you consider this is an inverse head and shoulders, that's why I put that arrow. The target is up here. I thought it would stop here because of prior fails. So somebody buying AMD now, where is the conviction when it was down here? Now you're brave, now you're not. It's twice as much as it was like a month ago, and now they want to chase it higher. I don't understand the logic. But it's rallying. Yeah, you missed it. Don't make a mistake twice. I missed it. If I'm not holding calls, I'm not taking the calls. If I'm building a position for the long term, I missed it. This is not a good start. There will be dips. Just buy the dip. Put it out of your shopping cart for now. That's my opinion. Okay, technically it could get to 148. If you're a momentum trader, you can buy high and sell higher. All the more power to you. Most people invest and they end up chasing after this, and then they come back and say, I'm in a stock from way higher. Can I sell calls against them? No, it's too late. So yes, it can get to 145, 150 based on that breakout, but it's now entering a big zone of prior fails. Not an ideal place to start longs. AMGN, on the other hand, it came up as, hey, this might start looking good. I do want to warn you though. Well, I looked at the business top line. I don't understand it very well, but it looks like the P&L is solid. It is falling into long-term support from last year, but it has lost very important support, and that looks like a massive head and shoulders. So the least I need to give it is half the threat, which is 30 points. Yes. So it could come to 200 and challenge this one, and this one failed. This shouldn't have failed, but it did fail. So if this is the head and shoulders right there, then these will be taken out. And if these are taken out, God knows where it goes. But that doesn't make sense from this P&L. So do your homework before you jump in. If I'm long, I'm not adding. If I'm looking to get long, I'm nibbling. That's my idea with AMGN. Look how consistently they are selling the rallies. So they can do this until they hit their target. Every rally will be sold. Look at it. And then they make a lower low. Rally, sold, low. Rally, sold, low. Look back. You can say the same thing here. Rally, sold, low. All right, so every rally is being sold until they promise me that they can change it. How? Take out 228. That's step one. Step two, which is more sure, take out 237. That's a mile away. So trade it with stops. Don't go all in. Amazon. Okay, so let me see here. Whoops. That was my comment from before. Buy the dip. Boy, was that real, right? We are in the buy the dip camp. We have been, and we took flack for it, but we were correct all the way. All right, so here are level. Oh my gosh, are you watching this yellow line? I don't remember drawing it, but there it is. So it's going into prior fails from October of last year. This was a death candle for Amazon. Let me see if they took out the overnight spike. No, they have not. Okay, so there is no way on planet Earth I would go long a stock, going in a tall tail like this one. You remember this? Right there? Right there. Doink. This is the earnings spike. This spike just ruined it for everyone because the breakout was in this area and now it's up in this area. So this is an end point until they take it out like considerably. So Amazon needs another very bullish week in the market to just blow past it. And even then it would create a pretty bad situation, a very extended situation. So I need to go into that and make it visible from a level. So it's right above that one. I need to put a line there. It's probably better. Sorry about that. It's early. And I'll make it visible. Yep, it is. All right, so we can go to a daily chart and see it. There it is, right here. That is the overnight spike. And look at what it matches. This to the penny. Boy, the machines let themselves be seen right here. Wow. If you don't believe in technical analysis and that it's a self-fulfilling prophecy, let this serve as perfect example of that thing. Look at it. Look at it. Amazing. Okay. So too late to get started, but it is tradable. So buy the next dip. You understand how I say buy the dip, buy the dip, buy the dip? But if you listen to the news, you don't buy anything because you're scared. Because the experts are telling you, watch out for this and watch out for that. We do watch out, but we don't stop trading. Okay, APH. I don't know this company. They are selling rallies on the daily. So they're starting to sell rallies. If they get to 78, 78.5, I would feel better about it. And even then, I want them to dip and hold higher. So look at this candle, which is 77 and change, and 79.5. 77 and change, 79.5. And then when they dip, I need them not to fall and make a new low. Like here, they pop, they dipped, they popped, they dipped and made a new low. So now they did not make a new low. If they can pop and dip and hold above this one, progress. ARKF. Honestly, is this? I don't know who that is. Ooh, they just lost a pretty good support. So now it's open season. It does have other support, but two problems. One, too old. Two, scattered. So the support is a zone, at least into 100, and then into 91. So yeah, you do have support, but why did they lose this? They need to come back to 120 pretty quickly. ARKF. I don't have anything in that. So this is the ARK financials. So probably has like Square and things like that in it. I'm not sure. So if I'm long PayPal and Square and AFRM and SoFi or any combination of those, I wouldn't do this because they're probably represented in there. Wow, gap down. That's pretty bizarre. So you do have support at 18 and change, and this is not good. So you might drift back down to like 17.7 versus taking out 19 or 20. So it almost hit the target. If they hold this area, they can dribble back up and hit the target. I am long PayPal and suffering. I am long SE and suffering, and they're both. SE has an arm that is like Square. So I would not touch ARKF. You should think about it that way as well. ASO falling back into pretty major breakout zone. So they lost this area. The target was met already. Rallies will have sellers. When they pop to 56, they will have sellers trying to break it. And if they roll back down and lose this area from which they pop, they will come down to the low 40s. The good news is that the whole zone from here into the low 40s is a place to start, not to exit. See all these resistance comments here? The whole thing is support. That would be my statement. It's a buy the dip opportunity with confidence. Wow, it's been a while. Yeah, okay. AYX, goodness, that is a messy chart. What is this? Alteryx. Yeah, I don't know, biotech something maybe. That is a horrible chart. I wouldn't touch it. Nothing below for a while until 2018. So there might be support. It's scattered, but they just lost a major support line, and now they will be selling rallies. If this is a biotech, expect these wild moves. So the next rally, even if it goes up to 50, I think will be sold hard, and maybe we'll try to make a new low. That's what happens here. Look, huge rally. Come back, give it all up, make a new low. Huge rally. Come back, give it all up, make a new low. Huge rally. Come back, give it all up, make a new low. So maybe you hold it for that huge rally again, come back down and make a new low. I don't know. So up is doable this week, but be aware that they're making new lows every time they have a big rally. BABA losing a pretty important support line. Listen, this is pretty scary. Now the company seems to be doing okay. I just bought something from BABA and it was absolute junk. I knew it was not great, but it was absolute junk. So I don't know how that company's in business. But they do make a lot of sales. They got it to me in like a week early, so I expected it on 6/6, I think, and it got here in time. So this is where they're going to try to pop, and they're going to probably face a lot of sellers into 84. See if they come back and make a new low. This is pretty scary, because if they don't recover this, that's why they need to get above 82 and hold, like 83 and hold and make progress, because then they're doomed to come back down to here. That's a giant overhead supply of sellers. So this support they're losing, there is one below it, but it would be like sell the rallies. BAC. They lost a neckline up here and they haven't recovered it. So now the battle is, can they come out of 29.5? Before they lose 26.5. I know it's a large area, but that is a problem area. So they could bleed lower. I don't think it needs to go where I have it pointing down, but it is a possibility. Look at the size of that thing. So when a stock comes, I just talked about an ABC on a stock before that. When a stock comes down, chops, consolidates, and then loses the consolidation, it can bleed down as much as it came down. Remember, the other one was on the upside. It rallied, consolidated, and then it rallied some more. Well, this one dropped, consolidated, and is dropping. So they need to recover the 30-31 line. Otherwise, I think they could drift lower. What would make them do that? I don't know. I have no idea how the headlines are going to affect banks. But I tell you that if we do have a debt ceiling deal, rates are probably going to fall and the TLT is going to spike, which is the price of the bonds. So I don't know how the banks are going to react, to be honest. I really don't. The KRE might spike, but other than that, I don't know. BITO, I am still long, and look at it, how it's trading my lines almost perfectly, so there's no need for me to change. Check it out. This is freaking amazing. Okay, so first we put these lines out, these arrows. We got there. Then I put this arrow. Look how accurate that arrow has been. I mean, you can't make better path than this as a team. So we had a plan and it's working out perfectly. Now all we wanted is to hold and start gaining back up and then finish the job. I will probably exit my position up here, but not in BITO. I will keep the BITO. I will exit in some Ether and some Solana and some other junk crypto I have. I will leave some because BITO pays me a dividend. The other guys don't. So I'll see. I'm enjoying a huge dividend from BITO. They haven't announced the next one. Maybe they won't. I'm not sure. But this was like 10, 15, 10, 47, 48, 41. So that's a lot of dividends for such a small stock. But I don't think they pay it every month. They have to distribute their gains, and they have to distribute all of it. So if they have gains, they'll distribute it. We'll see what happens this month. Like it didn't pay anything before because it was falling. Okay. I have no idea what you mean. Like in the portfolio, stocks and calls, I don't carry much stock. I trade. So it's up to you. Oh, in this one, I have nothing but shares. I don't have calls in BITO. I have shares. Okay. BITO, in case you don't know, represents the price of Bitcoin. It tracks the Bitcoin futures. Bank of Hawaii. All right, so I'm not involved in any small banks anymore. I played around with them. I had a few successes and I had one loss on FRC, and I lost interest. I did have the KRE, which I shared, a credit put spread. It worked. And with this one, I have no interest. Study the bank, study its finances, its likelihood, what assets is it holding, what a default would mean to it. Is it holding bonds, short-term bonds, long-term bonds? Because those prices will collapse if indeed we do default or they don't have a deal headline. Okay, so you do have a hard support at 31. If you lose that, you're probably going to come to 20 or 24. Meanwhile, there should be sellers, big sellers at 52. So if I hold shares and I trust the bank, I would just hold them. Bros, I'm tempted to go long, but I don't like the options yet. And I know they're going to try to sell rallies. And this was a neckline. So I need it to be above 31 comfortably and then come back and hold 29 and then come back, beat 31 to prove to me that they're done making lower lows. Otherwise, look how it's bleeding lower. There is plenty of support here, and it is hard. Like if I'm investing in bros, because the P&L looks okay, if I'm investing in it and I nibbled this past week, I did fine. If I want to nibble now, I'm doing fine. But if I go all in, I'm not doing fine. I would use shares or sell puts to own shares. Blackstone, we've traded it. It won. The calls paid and the credit put spread paid. So this is a trading stock for me, and I don't even like it. But some people asked, and we were able to trade it perfectly. So I will look for the next trade. Meanwhile, because it's starting to curl back up, they could come back to 90. So if I am holding calls and I'm winning and I took some off the table and I want to hold some more, that's fine. They are selling rallies, so they're chopping up. Drop and making higher high, drop and making higher high. They will face a lot of sellers as they approach 90 or higher. And they have a lot of support at 80. If for some reason they lose this point right here, I think they would lose this one and come back and test 76. At which point I will say, okay, this is worth a shot. And I'll put one below that. I'll trade it again. I don't own it. I don't know much about it. Caterpillar, I was tempted to trade it last week into an iron condor. So I opted not to. I'm not sure why. I haven't had much luck personally. I mean, I chart it really well, but I don't enjoy trading it. The last trade I did was an iron condor for us, and it gave us a heartache, but it was a good win. But it wasn't easy, even though it should have been easy. But we had a rally into the credit call spread, and then some people bailed on it. I stayed in it, and it played out well, but it was a pain. Right here, middle of the range. You have a high up here, you have a low down here. Perfect for an iron condor. There is one, so reach out to me if you want to see it. And now, I don't like this area down here on the left. So are they going to lose support and come down and finish it? So I'm going to put an alert here and an alert here. Those are extremes. They might not come. Look how accurate this arrow was. From up here, I said a rally. When I draw it like this, it means I drew it before this pop. I said a rally might fade, and look at where it faded. And it might curl back down, and if it loses support, this is what it'll do. Wow. Okay, so it's not perfect because it went a little bit lower, but if you look at it, that's amazing. So we expected this. Somebody panicking out of it did not. We've done a good job so far. I think the only way I would use it right now is a trade, like a credit put spread or a credit call spread or both, an iron condor. This one is in the hands of the sellers on the daily chart. I think they could bleed lower to 130 or 129, to be honest. Rallies into 138 will fade. And if they are not able to take out 140, I think they will end up at 130 or 129. I'm not looking at earnings, so that's on you. CHWY is a long if not for earnings. Now, if you want to take a trade on earnings, you might want to hop into the live room because we have some people that guess well on earnings. I give us what the options say it's going to happen, and I only missed one last week. The big one, NVIDIA. The options did not expect that rally that big. So I don't like to trade into the earnings because there's a lot of guesswork. This is a support zone. Earnings aside, I would dare be long, but because of the earnings, I wouldn't add to my longs, and I would be in the mode of buying the dip. I don't like this because if they lose it, there's a lot more downside, and I will put alerts just to make me look at it. This last credit put spread, this one here, gave some people a hard time. It ended up expiring for maximum gains, same as this one. But for some reason, this stock likes drama. It's a good company. So I will buy the dip on the earnings if it happens. If I own some shares or some calls as a bet on the earnings, that's fine. But it's just that, a bet. Costco, they reported, right? Yeah. So the reaction was initially low, and then they came back and took out a high. Super important. Now, caveat, what is today? Early in every month, they release the comp sales for the prior month. So it will have another headline early next month. If you look back here, you can see it. That is one of them. That is one of them. So they always have that. They report comps. So I think the bulls are in charge. They will buy a dip if it comes, and they will eventually take out this one. Now, if they take out 514, they can get another $15 out of it. I don't like to chase it though. So when it dips, I could go long. CRW, we did trade it positively. I don't remember what the outcome was. Not what the outcome, when that was. There we go. Okay. Maybe I sold puts in it on a dip of some sorts. Okay, so here's what's going on. They snapped out of this descending channel, right? The sellers were in charge. And then they went into a sideways channel to a degree to establish a base. And now they're building an ascending channel to higher highs and higher lows to take out prior fails. Now what's working with them is that this area, you see the three lines, this was an important area from here to here as a Fibonacci level. So it's a visual reminder that this is a pivotal zone. And look what's going on. Some sort of a cup and handle from here. The breakout from here has more upside. 170 is fair game, if not more. But now they have to deal with that 160 area. 160 to 170 should not be easy, but the target is higher. So this is a buy the dip engagement, unless there's earnings. There's earnings. Okay. So yeah, buy the dip. I can't be long into that big rally. That doesn't mean it doesn't rally. It just means it's not for me going in there. Same with this one. It's not for me going into 51. Anything above 51 has been death for a while, so not for me. I wouldn't short it though. So the breakout from here has more upside, but it still puts it inside this big zone of sellers. So buy the dip opportunity. The closer to 49 and 48.50, the better. Even if you just wait to buy it on a red tick, the calls you buy are so much cheaper. CVX, you know me, and oil, I'm not a fan. The companies are great. Management is awesome. I don't like the fact that the widgets they sell, oil, they can't control the price. Nike controls the price of his shoes. This guy doesn't. So if the price of the oil collapses for whatever reason, then its P&L becomes upside down, and the cheap PE becomes extremely expensive overnight. So I don't like that. They are selling rallies, and they better hold 150. If they don't hold 150, they're going to 140 or 135. I told you that months and months and months and months ago, and they are selling rallies, and they still are selling rallies. They're selling rallies. This one came to fruition. I could have repeated that one here on a bigger scale. So what I'm saying is, if for whatever whacked out reason they lose 150, they shouldn't. But if they do, they will bleed lower. They have a lot of support. So the companies are great. The management is great. They will adapt. I just don't want to expect miracles without a miracle headline. Okay, so trade this range, and they're trying to break out of that range. See that box? And now they're trying to break out. So this is what I drew, that dips will be bought, dips are being bought, but now they have a problem at 37. I'm going to round. Yep, and more higher. So it can get to 38. But if you're trading, buy the dip mode. So it's better to enter on red ticks into support in an ascending channel than to buy it into a prior fail. So if I'm buying a call here or shares, I might be disappointed immediately because there will be a dip. So as long as you know that, that's okay. Trading versus investing, of course. Datadog, I believe we bought the dip. We sold naked puts and put spreads. Sellers lurking. It's coming into that area. Great job, but too late to start. When anything below 88 would be better. The closer to 84 and 83, the best. You want this area to be shaken out. So a dip. Look at this beautiful rally. And then they give it all up. I'm not saying they want to do that, but at least give half of it or 40% of it. Okay. DG, look at that. They're selling rallies. These are the arrows I put down for DG. Selling rallies. Boy, was I right. The rally came. It was a little bit bigger than I had my arrow, but that was a copy-paste arrow to show the behavior, not the actual levels. Pivot zone, look at it. The pivot zone was to the penny. I promise you I did not put those lines ahead of time. And now they're in danger of making a lower low. If they make a lower low, they will be down here. That's almost a guaranteed into this line right there. So going long here is betting that you'll get one more bounce. I would exit on the bounce. If I got long and I made greens, I would exit. Earnings are coming. Oh, Lord. Okay, so that's definitely not for me. I don't know anything about this company. So didn't somebody just fall? Was it them? No, Dollar Store or something, whatever this other company is. Anyway, look into the business. My theory is that people don't care about saving money. I promise. Everybody complains about inflation. I don't see anybody skimping on spending. A lot of people are just still spending way more than they should. I don't know how that's working out. Dollar Tree, that's what it was. Okay, so this drop was on Dollar Tree. Maybe this one shook out all the weak hands and it can rally on its earnings. I don't know. We'll see. Devon, everything I said about Chevron applies here. I think this one is, though, natural gas, right? Oil and natural gas. I don't know. Is Chevron into natural gas? I can't imagine they're not. So Devon, I've been right about it. This red thing played out. This one played out. Up here played out. All bearish. Sellers in charge. That's a fact. Everybody's bullish oils, and nobody's saying that the sellers are in charge of the stock. They were bullish oil into a high peak, and they're still bullish oil, and they're not paying attention to the stocks of these companies. They are in the hands of the bears. And not many people, I don't hear anyone saying that. When you rally, come back and make a new low, the bears are 100% in control of the price action. This is where you can have a green scoreboard on a day, and the bulls are not in control of the day, not 1 minute. We pop open and we start bleeding lower. That's what's going on here. So I'm going to tell you this. If they lose 46, they should lose 44, and they will end up in the 30s. If they lose this one, they're in danger of triggering that one. So this is one bearish pattern that has a target that about here, which would trigger this bearish pattern that has a lower target. So I would not be adding to my current longs. Look at it. Every rally was sold religiously into the moving averages, and it has not held any of the floors. So why should this time be different? Don't assume anything. This is a solid support, but it's a big zone. Look at that weak area down here. This is not a good base to build a castle on. Just be careful. When can you breathe a sigh of relief? Above 55 and definitely above 56. That's a mile away, but that's when you think, okay, the bottom is in. Okay, this should be end phase. I'm certain. Maybe end phase is next. No? Yeah, it is. So I will take that guy out of here. End phase. I'm long. I sold a naked put and it's working out. And I shared it. I also shared a credit put spread. And not because I thought it was undervalued or anything. I was just going long against the prior support and leaving room for error. Now, I also think that it could rally back. So this is a daily chart. If they hold 160 and 155, they have the opportunity to pop into 170 to 180 to 185. I don't expect it to go to 210, even though this green thing says it's going to go to 240. But it's worth a shot. If the markets rally, I think this one has a lot of upside. A trigger could be 172.5, 173. So holding calls, holding shares, selling another put spread are good ideas here. That's what I'm planning on doing. I am long. Energy Transfer Partners. This was a buy the dip opportunity into the midpoint. It could bleed another 20 cents, but I don't know why I would want to buy calls. They're like chopping inside of wide zone, a bunch of support down here. So do you expect it to rally? Is it paying you a dividend? Ask yourself all these. 8%. So if you hold shares, then that's fine. Etsy, worth a long. In my book, I might try it this week. It will be some sort of an investment blend with a trade. So the stock is not cheap in dollar terms. The business is good, decent, I should say. The support is lost, so it may bleed lower. So somewhere down here, there is a buyer. So the way I'd like to do it is start with selling a put or a put spread. And then once I see short-term stabilization and progress, I would add calls or call spreads or shares. So if I wanted to own shares now, I would sell a put to own shares lower and get paid now. And if it falls into that, I would have bought the shares lower. And if I see a stabilization signs, like if it goes to 91, that's a pretty good sign. Then I might add some calls. I guess it's falling into support, but I don't have a hard line. FCX going to struggle into 35.5. If it clears 36.5, breathing room. Until then, they're selling rallies. How many times have I said this today? So all these stocks, they're selling rallies. So stop trying to buy these rallies until they prove to you that they're done. Whoa, okay. You see this line right there? All right, watch. I'm going to extend it. So what's going on? They bounced off of a floor very well. Came back, lost it by a hair, tried to recover it, came back, lost it again, and now they're trying to recover it. I'm going to tell you, if they don't get to 36 and hold it and get back above 37, this stock will be 31 or 30 in the next 3-4 weeks. So not for me. Headlines aside, I don't know what they do. FCX, not gas. Molybdenum, copper. Okay, that's right. And they do molybdenum. Remember the days of Mali? Copper and gold. So they're miners, yeah. So if you're long cat, you might not want to be long miners because cat mining equipment, whatever. So they're kind of the same thing. First Solar, look at this. No touch. They have an extreme low, you have an extreme high, and then back to the middle. What do you do with that? Nothing. Shortable, look at that. Perfect short if somebody took it. I didn't because I thought people were crazy to short it. It was an extremely strong stock. It's in the hands of the bulls. It's an ascending channel. Probably they will try to buy it into that candle. If for whatever reason they lose 170, they can come down like $30 from there. But that's a big if. And they have scattered support everywhere. This is a no-touch stock for me. I'm never tempted to trade that thing. FUBO, oh my gosh, this guy. I wouldn't touch that. Never tempted to trade that thing either. So FUBO needs to get back to 220 before 140. That's all I'm saying. Because if you get to 140, you're probably going to lose $1. But if you go above 220, you might crawl back up to 280. Fiverr. So I'm trying to reach people on Fiverr. I contacted 2 people. They sounded like they're in their 20s. They left the conversation midway. I sent a request. The guy sent back an answer, a question. Hey, are you looking for this type of thing? I said, yes. Nothing. Hello? Nothing. So garbage so far. All right. So I have one guy. I reached out yesterday, and I have an answer, like a notification to go check it out, and I haven't looked at it. So Fiverr, if it loses this one, which is right here, it's probably going to come down to 20 or lower. I don't know how well they're doing. Oh, okay, they have a lot of support. So this, I would be interested. Let's say it slips and comes down to here. It would be interesting if there's no earnings. Oh, there are earnings. When? No, there aren't. Okay, so I'm going to add Fiverr to my watch list just so I can look at it. I haven't traded in a while. I'm not happy with their service is what I was saying. FXI, I wouldn't touch this. It's like Alibaba. This represents basically Alibaba. Same problem with Alibaba. Lost support. They need to get back up to here. Otherwise, they're going to drift down to 6 to 10%, 7 to 8%, 6 to 10, 7 to 8. So they need to get back up, otherwise they're going to bleed lower. GFS, don't know what that is. It's going into a selling zone. I expect seller to show up between here and 62.5. So it's a buy the dip opportunity in whatever this thing is. Oh, there you go, 62. Wow. So unless you take out 62 and show that you can hold 55, 56. So approach 62, fail, hold 56, 7, come back and take that out. Yes. Otherwise, you might bleed lower. GLD was tempted for a minute, but not quite. You see my alert right here at 176. In this area, I would be tempted to go long. I wanted to short it up here. I did short it for us once or twice. I waited too long to short this. It was on my short list from here to here, including all the minors, and they all played out had I done it, but I didn't do any of them. Some of you did. I talked about it, never did it. GM, I'm really worried about all of these car makers, especially GM. I mean, management is solid. The company is massive. They have all the resources to succeed and push through all the adversities. But somebody's going to come out and tell us that it's all a lie. We cannot have a world where electric vehicles are the answer to fossil fuels. Because first of all, they are fossil fuels and they're very destructive to the economy and they're not recyclable. So we will have an ocean full of batteries. What are we going to do with that? Moreover, how many batteries are we going to get? We cannot replace how many vehicles we produce a year with batteries, because I think it's 120 million vehicles a year the world produces. 120 million. Imagine if they're all electric, and then every year it's exponential. You have to produce stuff for 120 million from last year, replacement stuff. So where's all the batteries going to come from? Who's going to mine for it? How many mountains do we have to kill in order to get the stuff out of the ground? So something's got to change in the technology for me to believe it. As it is right now, they're going to backtrack. They're going to say, you know what? We put deadlines. We're not on track. So, and that would be a good thing because they lose money on their EVs. Trading perspective, good support. If it loses 31.5, I think it goes to the 20s, like 29.5. It's unlikely scenario, but it goes down into the 20s. 34.5 area, 35. There should be sellers, more of them higher. I think Ford made a move with some sort of a hand-holding with Tesla. Good job, Ford. I haven't heard anything about that. They can't do it alone is what I'm saying. Not an obvious entry point for Google. Everything I said about Apple, first stock today, applies here. Great concept of AI, etc. Income from AI. I get it. You can't short it. Buy the dip opportunity. So into 112 would be great. I wanted to fill this gap. Meanwhile, they're free to run however they want. So if you're a momentum trader, buying high, going higher, that's fine. There are targets higher, but as an investor, this is not an easy starting point. And if you do start, I would not go all in. Leave room for problems. Same comments here. HYG. To be honest, a couple of people asked me about this. Like, no clue. Fundamentally, what will happen to HYG? Deal or no deal with the Fed? Not the Fed. The debt ceiling. The bond market will move extremely violently. In which direction? I have no idea, because I don't know what the outcome of the headline is. I think there'll be a deal. When? I don't know. So we might go through 2 no deal headlines and 1 deal headline finally, or one of each and then one. I don't know. Deal, no deal, deal, no deal, deal. Way. Yeah. Support below, resistance above is what I'm telling you. And for the recent term, they're selling rallies. Intel. Okay, so that was the stock to buy on the AMD, on the NVIDIA spike. In the live room, people wanted to sell and people sold puts into the dip. That was a smart thing to do. Now, Intel is still a beast as far as the dollars and how the market share. But my God, talk about turning into an IBM. They had the world by the you-know-what, and they just chose to let it go. And they've been like almost doing nothing about it. So there are experts among us in the field of semis. I'm not one, but luckily we do have people in the live room that always help me with this one. On paper, it's a stock you would want to own for a comeback, and luckily it's a low dollar amount. I would hold shares. If not, I would sell puts to buy shares and buy leap calls. That would be probably the cheapest way, at the risk of getting assigned shares, but it would be better than buying shares up here. So that would be how I would approach this. If you did it last week, good job, you have profits. Until they break out of 30.5, they're stuck. They can get to 31, and if they do, they could probably dip a little bit and get to 33. So I would hold longs if I'm long. J&J, I'm not going to trade it. I don't know anything about it. It's a healthcare. Is it a vaccine, not vaccine? I don't know the blowback from the vaccine on it. Anyway, I don't do the whole sector because they're prone to headlines, and I can't control that. Technically, it's falling into very wide base. So it's too late to panic because you have support within $3 to $5, which usually offers a good base. But I can also tell you rallies are being sold. It's not, don't take my word for it. Look at it. Every rally was sold. So the next rally will be sold. 157, 158 should be tough resistance. KO, for the life of me, I have no idea why a company that is so solid in its income is so violent in its stock. Why should KO do all of this stuff? And selling rallies, that was correct for that area. Resistance, that was correct. Sharper resistance, that was correct. So this is a place to buy the dip into prior support. If now you're looking to get long, okay, I get it. And it's probably going to give you a swing back. And I probably will estimate that there will be sellers into this area. And let me see here. This is 1 day. I wonder if I have them. Sellers into 62.5 and sellers at 65 on the way back. If they take out 65, that would be a good catalyst. But that is way, way out in time. So I would say seller zone 2. Okay. So if I look at them this way, now you can see it. Support down here for sure. Weak points here. I don't know what's going on. KRE, I went long by selling a put spread. If it dips, I'll do it again. I could repeat the put spread actually. I don't know if I want to do that. Banks will move on headlines or no headlines from a deal or no deal. Catalyst higher, 42.5 maybe. Will get you over the 43 hump. 43 is very tough, and so is 44. But I think taking that out will give you enough oomph. Inverse head and shoulders, the target will be 47, 48. You see it right here. Shoulder, head, shoulder, they're drawing it. So as long as they hold 39, they can crawl back up. And if they take 42 out, they might get up to here with a couple of hiccups. So if you want to visualize it, I would say this is a catalyst eventually to do this kind of a thing. The deal was reached. Oh, we'll find out tonight, Robert. Thanks for that. Or a framework of a deal. Agreed to agree. They didn't sign anything, it's just a framework, right? And that would be a huge catalyst to stocks. If that is the case, I would not want to be long anything. Malarkey. You guys are funny. LAC, speaking of lithium, middle of the range, falling into support. You should have support inside a very wide range down here. I don't know much about the company. All I can tell you is that they're selling rallies, so be careful being trapped into going long because the rallies are being sold short term. This is a head and shoulders that tells me they want to get to 20 or 19.8. 20 or 19.8. Let me give you the visual on that one. That's probably a little too high. 19.8. God dang, Nick, you're so accurate with your eyeballs. Okay, this was an estimate. The actual target is lower, but I'm going to give it only a 19.8. Lockheed, I haven't traded in a while. Ooh, nasty. Okay, so we've traded it successfully, I think 3 times. 2 iron condors, but 4 times. Credit call spread, and then a credit put spread, and then a credit call spread, and then a credit put spread. So 2 successful iron condors. I said vulnerable back here. It did it twice. You see it? Top, top, top. If they don't hold this, they will end up at 420, 410, in which place I would try to get long. Now, if somebody went long now against prior support, I get it. Just make sure you stop yourself out, because they will sell rallies. There are sellers into 468. I don't think they can take that out without a war headline. Yes, this is a war company. Sellers. Let's put it in the middle. Which means rallies, we're going to be met with resistance, and they might lose this. And if they do lose this one, they will come down to here. So if you want me to put a visual on that one, we can. The downside is actually more than this, but I'll put it there. Let's see if I can show you that. Oop, it's gone. This is the visual. Check it out. It's wonky on the daily, but you get the idea. All right. Lululemon was shortable. I didn't short it. I should have shorted it. You can't catch it. Look at the hole below. Look at that. Plus, I'm noticing, I mean, I'm not a social media expert. There are a few companies in the target of social media. This is one of them. Target is the other one. Don't trade Target, just in case that takes the rhetoric takes hold. So I don't know if it's true or not. Whatever they're doing, they're not doing. Lulu is getting some heat. Now, this is a good company. It is falling into support, but look at this giant gaping hole right here. There's no actual support. So be careful with trading headline stocks, meme stocks. So approaching a good place to enter. If I'm selling puts into it, oh, I know what it was. Was it Lulu last week, or was it Ulta? Either of those two, I don't trade them because they don't fill. I had an order open all day to try to sell puts into a drop. I can't remember if this one was or Ulta or both. And they wouldn't fill. They just wouldn't fill. I was very frustrated. So, and then I remembered why I don't trade these two. MasterCard. So not too long ago, somebody, what do you think about Visa and MasterCard? I said, they're way too high. They're not for me. Buy the dip. This is a dip that was buyable. Now, if they don't break above 380, I think they will end up at 350. They're going to do this, one of these. So they could do this. There are sellers here. And then they might come down to here and retest. And if they do retest this one, I think they could just do a little jaunt down to here. And that would be a great place to enter. So I'm going to put an alert for myself here down. One here. And definitely, let's take out all the junk. And definitely one here. And if they ever come down to here, I would sell a lot of puts. Long. Not that that's going to happen. It's there. Tiny little head and shoulders, bigger head and shoulders. You don't know what's going to happen in the market, so be open to all of it, okay? Shorter term, you can see sellers into 380, 382, 384. Sellers should be lined up here. So if I wanted to be critical about it, I would put sellers. Okay. Section 1 over. We will stop this video and start a new one.